Dutch entrepreneurs are quietly closing their BV companies and leaving the country, and in this video we are going to discuss everything that you need to know as a Dutch business owner, as an entrepreneur, investor or businessman in the Netherlands. And for that, let's start with what Dutch BV owners actually pay in the Netherlands. So we are looking at the corporate tax rate, which is also called the VPB in the Netherlands, and as we see here, as per government of the Netherlands, the corporate income tax is currently in 2026 19% for the amount of 200,000 euros in taxable income or less, and if you earn more than 200,000 euros in taxable income under a BV company, then the corporate tax rate increases to 25.8%. That in itself is quite a bunch of money that is already going to the tax department as an entrepreneur. However, this is just the beginning, because the tax system in the Netherlands is quite complex. It is split into the box 1, 2 and 3, and in box 2 we have the dividend tax, which means you are paying another 24.5% for up to 68k approximately, and anything above that will be taxed with 31%, which basically means to me or to any entrepreneur, the bigger your success is, the bigger the tax rates that will apply to you and your business. And if you do business in the Netherlands, I mean, I'm German myself, I know how many upcoming entrepreneurs, how many successful businessmen and families with a lot of wealth are in the Netherlands, then unfortunately you and your wealth are a victim of many more tax nightmares, which easily creates a tax burden of at least 40 to up to 50%. I mean, just the progressive income tax in the Netherlands under box 1 can create a total tax rate of 49.5%. And then again, this doesn't just affect normal working employed people, this affects all kind of income. No matter how you generate your money, nothing is safe from the tax department. We have box 1, box 2 and box 3, and depending on how you make your money, you will be affected by that. In addition to that, there are many more smaller things, such as the mandatory DJA salary. If you own at least 5%, just 5% of a company, then you're also liable to pay yourself the minimum salary, which is 58,000 euros in the Netherlands, and this logically then means you are also liable again for box 1, which is getting taxed almost 50%. So you can say that half of the money that you're forced to pay yourself as a salary, even though you might prefer dividends, no, you have to pay yourself the minimum wage, and half of it will evaporate into taxes. And also, let's not forget the value-added tax, the VAT, which is 21%. I personally would describe it as quite high, especially because the Netherlands is also a very consumer-oriented society, and also a lot of young Dutch entrepreneurs do e-commerce, for example, and so all of them are directly or indirectly affected by a 21% value-added tax on top. And as said, those are just the most common and known tax rates. There are many more hidden costs, contributions and payments, which I know from my own experience of doing business in Germany many years ago, before I left the country for good. And so I know exactly how it feels trying to build wealth in a country where you're literally in a tax trap. I mean, let's talk a little bit about box 3. Box 3 focuses on income from assets, savings and investments, and is often also referred to the Dutch wealth tax. And what happens here is literally, factually crazy, because the current trap is that the government assumes you earn around 1 to 6% on your investments, which will then be taxed with a 36% tax on that fictional return that the government, the tax department decides for you, even in a loss year. And for 2024, we have the rates here on bank deposits and savings, for example. So let's say you have money on your neobank like Revolut or a local bank in the Netherlands, you're getting around 2, maybe 2.5, 3% on that. The average tax rate here is approximately 1%. Investments and other assets, 6%. So if you were to invest into stocks, for example, we are talking about a much higher tax rate. And if the investment stagnates or maybe even goes down in value, which is pretty common, I mean, just look at the stock market, then that means that you will pay tax on income that you may have not even earned. And now it's getting even crazier as a Dutch entrepreneur, and that is even the Supreme Court said that this system is unconstitutional. As we see here, on June 6, 2024, the Dutch Supreme Court issued an important ruling in 5 cases on the net wealth income tax in box 3 of the Dutch personal income tax. The wealth tax is discriminatory, which then allegedly led to billions in refunds which the government owed to entrepreneurs and investors. And now the government decided that they are just going going to change their entire system. And the future regime looks even crazier. From 2028, which is the deadline in my eyes until you definitely need to leave the country if you have at least some kind of wealth. Because from this year and onward, there will be a taxation on unrealized gains, on actual gains, which will also include unrealized gains. And the Dutch lawmakers already approved this crazy 36% tax on unrealized gains, which will include all assets such as cryptos, stocks, bond gains, even your second home. And this most likely will go into effect despite so many questions from parliament members, so many protests, so many signatures collected, and people that tried to veto it and tried to interfere it. I mean, not just in the Netherlands, this was a big topic, but entrepreneurs from the whole world said how crazy this is. Even the Shopify CEO said that this is one of the craziest things a government can do. However, the Dutch government decided this will go into effect most likely from January 1st, 2028. So I'm saying it again, and listen carefully. If you don't leave the Netherlands until January 1st, 2028, your whole portfolio will get taxed even if you don't sell the assets, which means you will pay taxes on growth before realizing. And this means, let's say you have 100,000 euros invested into crypto or the stock market. Now, if the cryptocurrency, let's say Bitcoin or stock or any other asset, will temporarily go up 10% in its valuation, and you will receive your tax bill at the point it gained 10%, by the time you are liable to pay this tax, Bitcoin or whatever the investment is might have dropped 20% in value, which could then technically and realistically even create the scenario where you are left with no liquidity and you're forced to sell the assets in order to pay the tax bill. And I'm pretty sure that there will be Dutch entrepreneurs and investors that will be affected by this exact scenario. I mean, you're literally getting margin called by your government. Insanity. And this is why I say that the Netherlands is currently suffering by death by 1,000 cuts. If we look at the last few years, then we will see that the self-employed deduction, for example, which is the amount that you can make tax-free in the Netherlands, went down by 90% from 2020, where it was 7,280 euros, to just 1,200 euros in 2026. I mean, you cannot even pay the rent with that. And this is not even about tax the rich anymore. I mean, you see that they literally want to tax and drain the wallets of every Dutch citizen. Oh no, sorry, not even citizens, but even the expats, talent that move to the Netherlands and bring business to the country, boost the economy and work for important startups. Even to these expats, there are significant changes to the tax benefits because the 30% ruling where 30% of the salary was tax-free is gone, just as the non-resident status, which also gave certain tax benefits to non-residents living in the Netherlands. So this, as well as the box 2 split and the race and many more things, shows you that every year it gets worse and worse for entrepreneurs and investors in the Netherlands, with 2028 as the final countdown. And so let's look at a few statistics that actually prove what I just said, that Dutch entrepreneurs and investors are actually leaving the country because the business climate is shifting. We have business closures, which are up 18% in 2025, at the same time as new started businesses are also down 10%, which is the weakest growth in over a decade. We have here Dutch sources that confirm what I just said. I do not speak Dutch, but if you do, you can read this article by KVK, which is the Chamber of Commerce in the Netherlands. Then we have, as said, the BV closures spike. We are at levels that were seen only twice since the 2008 global financial crisis, and it is especially concentrated in holding structures, which means that specifically high net worth and ultra high net worth individuals are closing their structures in the Netherlands. They want to escape this madness and relocate to low tax jurisdictions, which we are going to discuss in a minute. I mean, let's just look at the last quarter here, which shows a 36% increase in Q1 2025 compared to Q4 2024. And the general trend is also going upwards. And when we are talking about those closures and liquidations, then it is also quite interesting to look at the amount of turbo liquidations, which is the new trend in the Netherlands, because approximately 40,000 companies a year are dissolved via turbo liquidations, where there is no notary, no notice, and this means 80% of all closures are going through this process. This is what we see here by the source accountant.nl. Here we see 40.000, which is something like 40,000, as we would say in Germany. And now we have the ultimate statistic, and that is the capital outflow, the wealth exodus in the Netherlands by the Central Bureau for the Statistic, an official source that says that 212,000 people emigrated from the Netherlands in 2025 alone. And as we see the trend is ongoing here, emigranten, so people that leave the Netherlands from 2022, which is the dark green bar here, to 2025, it is clearly increasing. And so now the final question, okay, where are these people going? And the answer is also backed by official reports by Henley & Partners, which is the leading source for wealth migration reports, and the 2026 first version wealth migration report was just released, and it shows that Cyprus is the #1 destination for wealth in the European Union, while it is also on number 4 worldwide. Cyprus is just below Cayman Islands, New Zealand and Singapore, which are obviously known for attracting global wealth entrepreneurs and investors at current times. However, these jurisdictions are quite far away, especially Singapore is in Asia, so it is very, very different, especially for families that currently live in the Netherlands. However, Cyprus is a Christian Orthodox country within the EU, and it is just a 3.5-hour flight from Amsterdam to Cyprus. And if we look at the comparison between the Netherlands and Cyprus, especially in relation to tax, it's pretty obvious why so many Dutch people currently move here to Cyprus. First, let's look at the corporate tax. We have 25.8% for the top rate in the Netherlands, while Cyprus is flat 15%. But now the most interesting part is the dividend tax, which goes up to 31% in the Netherlands, while in Cyprus it is 0% with the non-dom status, which is a physical document that we will give into your hands, which you can then prove to your Dutch tax department that you are a tax resident of Cyprus now, and you're 100% legally fully tax exempt from any taxation on your dividend and interest income. And this applies to private companies that you own, like your Cyprus Limited Company, shares that you own in public listed companies where you receive dividend, and on the interest income that you receive from the bank account that we discussed earlier. In addition to that, we also have no inheritance tax in Cyprus, no wealth tax, and there is no capital gains tax on the sale of shares. And those are just the key nuggets when it comes to the Cyprus tax system. It is one of the best tax systems in the EU, maybe even in the world, because it is also OECD compliant, which means it is bulletproof. We are not gray or blacklisted by any authorities. You can open up bank accounts in many jurisdictions, even private banking in Switzerland, with your tax residence certificate of Cyprus, with a Cyprus vehicle, entity, company, trust, whatever. And next to those tax benefits, Cyprus also offers an amazing lifestyle with 300+ sunny days, the cleanest seawaters in the European Union with the most blue flags. It is one of the safest countries in the EU with one of the lowest homicide rates here. Day-to-day life is extremely safe here. Even me driving around with expensive cars, wearing expensive watches, I never felt threatened within the last 7 years of living here. And again, it is just a 3.5-4 hours flight to go back home to Amsterdam to visit friends and family, or much rather to receive a visit from them. And this is why I say, as your German neighbor, that Cyprus might be the best solution for you that combines tax advantages with a high quality of life. And if you're interested in anything related to Cyprus, moving here, setting up your company here, receiving your non-dom certificate here, renting and or investing properties here, fill out our short form on the website tax.one, and then we'll reach out to you very soon and discuss your new chapter here in Cyprus.